Hey guys, what's going on? Welcome to Lunar Beats Crypto, where we ride the waves of the crypto markets and other markets, but whatever. So, we've got a new wave riding strategy, new-ish. I've been really just trying to refine it lately. I went over this, I believe, on Friday's stream. No, I think it was Thursday's stream. But there's a few rules to it. But right now, I'm just really trying to really refine those rules. But right now, this is kind of just the basic gist of it all. And that is, so we've got our Asia range. We take out the low during London. So then we are favoring higher prices since we took out the Asia low, but not until we get into New York. But then we take out both highs, both the Asia and London highs during the CBDR session up here. This isn't the actual CBDR session. Doesn't really matter. I need to take these labels off anyway because the labels don't really matter on these because this strategy is for the New York session, but we've got to be able to look left to see what we are going to be doing today during the New York session. So with that in mind, we take out the low and we take out the highs. So really what this strategy says is one of two things, and that is, we go by whatever the first fair value gap is of the day, and if that doesn't really play, then I mean we just don't take a trade. So kind of a lower probability type of day. Now it is Sunday. It is the weekend. So these are typically not days that we want to trade. Now, if I go to yesterday, Saturday, probably could have made a trade on a Saturday, just a quick one. But between the 8:30 and 9:30 time frames, we see a big bullish fair value gap created that we do break out of or create right here and then come back down into, and we come back down into it twice. And then price really ramps up and gets moving to the upside. And then if you were in a trade, you probably would have taken profit on this. Then we see price come down to this order block right here and then give you another bounce. So just having these things laid out on your chart can give you an edge if you know what you're looking for. So when price just comes down here quickly within 15 minutes and then gets sucked back up, that's a good indication that this was a nice little block of buy orders, and that you can maybe hop in a trade here and just ride it up a little bit. Maybe do a little 2-to-1 where you just come down, take the low here, and then just do a 2-to-1. And there you go. There's your 2-to-1. It gets hit. This might even play on a 3-to-1, and it does. So just, it's all about having your charts ready and prepared for the day. This is the 5-minute time frame, so things move a little quick. Not real quick, but a little quick. So just something to watch, and let things develop. Let things let things give you a clear indication of where things could be heading. One thing I want to touch on in this video is order flow, and my new understanding of order flow is that if these hold up your fair value gaps, whether they're bullish or bearish, and they are respected, then the order flow has likely switched in the direction that you're looking for. So what do I mean? So basically, if I can just draw it out real quick, we can see price is coming down, right? And then price starts coming up. Okay. So basically what we're looking for is for like a fair value gap or some other type of point of interest. Maybe it's an order block or a breaker block, or just something that is in this wave here. Then we can come down. Here's another wave. And when that flips and we start putting in and holding other points of interest to the upside, then we have effectively changed the order flow to a bullish order flow. And now that these things are starting to hold, well, that means order flow is switched and we are now bullish, and we can start considering longing on these bullish points of interest, these bullish fair value gaps, bullish order blocks, what have you. So just something to think about, and hopefully help you flow without even having to look at the actual order book and or any other type of like indicator. So what I love about this strategy the most is that it doesn't necessarily need an indicator. It doesn't need like an oscillator. It doesn't need like a market cipher or a chart prime or an RSI or a Bollinger Band or anything of the sort, because we are looking for specific things at specific times of day. We are looking for fair value gaps more often than anything else, really. And we so yeah, that's just, you don't necessarily, oh yeah, and you do a fixed ratio like a 2-to-1 on your trade, or a 3-to-1 even, and you just let that ride. You just let the 3-to-1 ride, and if it, or 2-to-1 ride, and if it hits, it hits. Now this one, I mean, if you watch the price action throughout the day, you could even move your stop loss down. And if you're comfortable with just breaking even and maybe catching more of a move, you can do that. There's nothing wrong with that, but you've got to be paying attention. And that does, the longer you're in the move, the more likely it is that it is going to come back and hit your stop loss. But if you can see, if it's pushing down quickly and you can adjust your stop loss, or maybe even throw on a trailing stop loss, then that could greatly benefit you in your trading. So just something that I would consider. So if we come back to this day, we can see that we've kind of barely taken out the lows here, but we can see the liquidity raid happening on this right here, because this is a quick move to the, this was a struggle, kind of. I'm trying to think of a better word. This was a slow move to the downside, whereas this was a quick move to the upside. So for me, if I'm seeing the quick move to the upside and it's taking out that London high, then I am probably going to be looking for shorts. And in this instance, we get the bearish fair value gap. And as market opens, we come up into that fair value gap and reject it. So that is something. So could have made a nice little trade off of that one. Let's go to Thursday and let's review Thursday. Let's see. So we take out the low, so we're favoring bullish price action. We want to take our first fair value gap that is created after 10. And if I can get this thing to, there we go. Now it's very small, but we do create this fair value. Oh, well, actually, it's actually bigger. So that's nice. So we create this fair value gap. It's the first bullish, because we are favoring longs, first bullish fair value gap created after 10 o'clock. Break up, come right back down into it, and then it pushes back to the upside. And if you missed that one, there's another one, and this is showing bullish order flow, okay, because we can see that the fair value gaps are being created. We're getting displacement or impulsive moves to the upside, and then we're coming back and we are holding these fair value gaps and keep continuing to push to the upside. So that is just showing us that we have bullish order flow, and that is, we're favoring longs. But we can see we even push through this one, come back down, tap it, and then a couple of times, and we get another push to the upside. And then on this one, we actually come back down to this fair value gap and push off of that and push back to the upside. So we're just favoring longs this day because, hey, all the fair value gaps just keep being held. Bullish fair value gaps keep being held. So just favoring longs for the day. We'll do one more. We'll go to Wednesday, see how Wednesday played. Now on this one, we do the raid on the lows, and we create this fair value gap. Now this is created before 10, and this is part of the refining that I'm trying to get down because Bitcoin is traded 24 hours. So it's not exactly like the stock market. So I'm trying to see how often, I'm doing a lot of back testing, and I'm trying to find how often do the plays happen before 10, or I should say, do the fair value gaps that we can play off of happen before 10 o'clock? Because if we can get an edge on that with Bitcoin, then we can make a lot of good plays off of this strategy. So that is something that I'm really trying to hone in on. I'm really trying to get that timing on that. So, but we see the quick move to the upside after the liquidity raid to the downside. So because we get the liquidity raid to the downside, I am favoring longs. The very first push that we get up, and we actually took out nothing but lows here. We didn't take out highs, so I'm already favoring the bull side anyway. But we can see that it doesn't really happen initially. Now, we do get a fair value gap here as well, but it's not the first one that is created. But it is the first one that is created with 3 bullish candles, whereas this one has the bearish candle here, and it creates a fair value gap, but we can play off of that one later. But for the first trade, we could actually play off of this fair value gap here. Well, let me do this. So we've got this fair value gap here. Of course, we come up. We really don't create the fair value gap until this candle. So technically, this one's kind of iffy. This whole freaking thing right here is kind of iffy just in general, because we can see we quickly go from bullish order flow to bearish order flow back to bullish order flow. So it's just kind of a little bit of a tricky day on this one. But if you're patient and you can wait until the pre-lunch hours, as we come down and we come back down to this fair value gap, then we can make plays off of that. I mean, you can make 1-2 plays off of that at least, at minimum. But then you get the bullish order flow to the upside, and then you start creating other gaps, fair value gaps that we come down and tag and hold and push to the upside. And we have another fair value gap over here that we can play off of, or at least some type of point of interest. May not be a fair value gap. I do like to play off of wicks though. So you might not even get this afternoon one, which is fine. It's fine, because I mean, if you've played your cards right over here, then you could just be done for the day in general and not even have to worry about the PM sessions. So just a little bit of an overview of the strategy that we are working on, or that I am working on at Lunar Beaches Crypto. So eventually, maybe I will start to implement some indicators, some oscillators, or some EMAs or something like that to kind of help, because I know I know people want their confluences and all that, but that's not the point of the strategy. The strategy is just to, okay, if this, then do this, right? That's the whole thing. If this, then don't do this, right? So, and then every single time it's going to be a 2-to-1 trade or a 3-to-1 trade. So the 2-to-1 is going to play out more often than the 3-to-1, just because the 3-to-1 involves a little more. I guess a little more risk, because you're holding it for longer to try and get a little more profit, right? Whereas a 2-to-1, you're not holding it as long. But it's actually a better risk to reward playing the 3-to-1, because that's how odds work. But anyway, let's see. Well, it's a better reward. That doesn't necessarily mean make it a better risk, better on the risk side. So, we're still working on it, but once we get this strategy down, I think it'll be very profitable for viewers, and myself included, myself as well. So hopefully, we're just going to continue working on it. No, hopefully we're going to continue working on it, so that we can bring you guys an amazing, profitable strategy that I hope you all enjoy. And yeah, but that's going to be it for this video, guys. Just something, just wanted to go over a little bit where I'm not feeling really rushed, because it's like early in the morning and I'm trying to get ready for work. You know how it is. But anyway, guys, I do got to get out of here, because it is Mother's Day, and I am traveling to go see. We're gonna go see my wife's mom. So, they're about to be home, and I got to get out of here. So, but anyways, I love you guys. I hope you all have an amazing Mother's Day. Have a radical Mother's Day, and ride those waves. I'll see you tomorrow morning. Peace out.